Well, it's top of the hour, a few minutes, maybe 30 seconds after. I'm Jimmy. I'm with Banking Bridge. Here with Brian Richards with ICanBuy, and wanted to just, of course, welcome everybody to the webinar talking about options for rate table advertising. We work with a number of lenders across the space. Brian's been in the industry for a long time, and just thought it would be educational to kind of discuss other options out there if you are interested in advertising your rates, advertising different type of products on the internet, and Brian offers that option on their side. So Brian, tell us a little bit about kind of your background, how long you've been in the space, and all that.
Yeah, perfect. Yeah, so I started out in the brokerage business, actually, ended up on the research side of the world, and ultimately landed with a company called Informa, who owned a comparison rate table business. So it was known as Informa Research for a long time, but now ICanBuy, and really just helping consumers in their journey to find financial or personal finance products, whether it's mortgage, home equity, auto deposits. We work with a pretty long list of advertisers, 100 plus active today, and we drive consumers through or traffic through about 50 different publishing partners, and really focused, like I said, on mortgage, home equity, deposits, auto, personal lending, and student lending.
Cool. So there has been an evolution of your rate table, Informa. Talk us through that history, because a lot of people may know you from another name, and tell us kind of how things came to be and where you guys are today.
Yeah, perfect. So yeah, I mentioned Informa. So the ICanBuy technology was developed in 2006. And I was with Informa I joined them in 2009, but Informa acquired the comparison table business in 2013. And we ran under a couple of different brands, but mainly Informa Research was the main brand. In 2021, they just decided it wasn't core to who they were as a business, because they're really more into conferences and data collection, and ended up selling the business to Mortgage Research Center, who is heavily into the lead gen side of the world. So we rebranded as Brown Bag Media. There was some confusion in the marketplace. So we ultimately went back to ICanBuy, which kind of feels nice to go full circle after, a couple of decades, but it's been great. And I think that the highlight of joining Mortgage Research Center are the brands that are really involved in the lead gen space day to day. Patio Lending, Veterans United Home Loans is one of our brands, which is the largest VA lender in the country. Three Creeks Media, MRC, and ICanBuy. Just want to highlight real quick that we do have a couple of lending brands in our portfolio. Those brands were clients of the table before MRC acquired it. They're still clients. They pay the same price everybody else pays. They get the same reporting everybody else gets. So there's no advantage for them being, even though they're part of our family of brands. It's a level playing field for everybody.
Got it. So the idea is that the advertisers or the publisher community that you have on the right slide here, those logos, those are high traffic websites. They talk about different types of finance, and then you guys are partnering with them, and you're essentially embedding your rate table or products into those high traffic websites. Is that how it works high level?
Yeah, exactly. So we have about 50 different publishers overall, a really good mix of real estate and personal finance. These are some of the known brands that most people can resonate with, but the idea is that realtor.com, for example, has a lot of traffic or consumers moving through their world looking for a home, and part of that home journey includes financing the home. So they use our iframe widget to display in their mortgage section or off of a calculator. We display the advertisers that are part of our advertising network, display their live rates. When they click, we charge a cost per click, and then we share revenue back with the publisher. So that's kind of the circle.
Got it. So yeah, so speak on a little bit of the I guess the differences between maybe a larger platform out there, if it's a competitor or not, and then kind of with where you guys serve from an advertising and budget standpoint.
Yeah, I think, Jimmy, the two big factors in my mind when advertisers are displayed on other tables, and there's some really good ones out there, some good brands out there. They're often not only competing with other advertisers, but they're competing with the brand of the website that they're on, right? And in this case, I had to spend a few minutes explaining who ICanBuy was. That's kind of by design, right? I don't want to be a consumer-facing brand because my job is not to engage with the consumer. My job is to sit in the middle or behind the scenes and connect consumer through the publisher to the advertiser, right? That's where I want the eyeballs and the visibility to go, not on my brand.
Yeah.
The other thing we did, I think, which has been super helpful for a lot of people on this call, was we made it easy. The point of entry is we made it a non-issue, right? We have an insertion order. You can set your budget at whatever you want that to be. There's no time commitment. We really want people to test it because we know if they test, and at the end of the day, the numbers pencil out, and the loans are funding at a rate that they can, win and make a living on, they're going to spend money with us. And that's really what we've always done. Just try to remain super flexible and not compete. And then ultimately we don't retarget, right? So when the consumer opts for, one of the lenders on the table, we redirect them to that lender. We no longer have visibility. The publisher doesn't have visibility. So we're not able to go back out after those guys and resell it or offer some other solution.
Yeah, that's a big difference. And speak on the overview of how the table works and the fundamentals of that.
Yeah, pretty straightforward, right? So this is a standard table. This one happens to be an image of realtor.com. Consumer would land here. There's a couple different ways you get to it through Realtor, but the easiest one is on the top, you'll see the word mortgage. You click on that, it'll drop down and show you today's mortgage rates. And the consumer will go across the top and refine their search, whether it's purchase or refi, the type of loan they're looking for. We are state specific, even though it says Los Angeles. If they typed in Simi Valley, it would still show the same rate as it does for Los Angeles. And then loan amount, down payment, and their estimated credit score. When they hit update lenders, the table refreshes. And basically that's the ICanBuy technology. It's pulling in live rates from these lenders based on the refinement that the consumer made.
Got it. And from a design standpoint, I've seen, it seems like, because I've been following rate tables for a number of years, it seems like maybe the mortgage research acquisition, a little bit more investment has gone into the look and feel of the table, modernizing a little bit. Have you seen those changes?
Yeah.
With the improvement. Okay. The speed and everything really has improved.
I appreciate that. And I'll make sure the team understands or knows that, having Informa own it was a great partnership. I worked there for a long time. But this was not their core business, right? Table display and design and consumer behavior was not really their cup of tea. And joining MRC, it's 100% what they do day in and day out. So the design team, layout, or SEO guys, just everybody's so good at their craft, and we've been able to leverage that. And we work with our partners. Realtor is a great example on making sure these tables are laid out and the colors are correct and everything's displayed properly to drive the most engagement from the consumer. So it's a daily part of our world to make sure we're staying on top of things.
Yeah. And if there's any questions, so as we go through here, feel free to throw questions in chat. We'll pause every now and then. Brian will check chat and we'll read out those questions. So if you have anything, it could be anything. It could be budget. How do I get started? Anything you want to ask, and we're happy to address that. And lead overview. So maybe tell us what's different from your perspective on your tables versus others?
Yeah, so a landing page clearly is kind of your area of expertise, right? And it makes a big difference, right? Having an effective, consumer-friendly landing page drives a higher CTR and ultimately a better CPL when it's all said and done. But it's critical to this mission. One of the things that makes us different than even Mortgage Research Center, which is on the lead side, so they capture all the PII information, right? Name, address, email address. I don't capture any of that, right? My goal is to display the live rates. The consumer, again, then decides who they want to engage with. So let's say they click on district lending in this example here. They click on district, I'd redirect them. Now it's district lending. It's in district lending lead flow, and it's district lending responsibility to convert this consumer through their funnel and make contact, right? Speed of contact is still, everybody preaches about it, but it's a big part of success or not, in my opinion, for a lot of people, and some do it better than others.
In cost per click model, define that. What does that mean? How do you evaluate that?
Yeah, so once they click on either the view detail, the red button, or the lender logo, they'll get a notification of we are redirecting you to that lender notification. It takes about 3 seconds. We then drop them into the lender's landing page, at which point we charge the account the cost per click. And right now we're running in the $6 to $8 range. Our standard pricing is typically 9 and 10 purchase and refi. But like I said, we've been doing this a long time and understand the fact that these clicks have to convert into leads, have to convert into PALs, have to convert into pre-quals, and ultimately close funded at a certain rate. And, at the $9, $10, $11, $12, it's a challenge. At $6 and $8, things are backing out. So I like to move before my advertiser community tells me I have to move. So we try to stay in front of that. And I think just, a couple of decades of experience have led us down that path.
Yeah. And then the big thing that I see is that it's your click, it's exclusive click, I guess. It's not, there are other platforms out there that they have trying to change the way that they do things, and it looks like you get the lead, and then all of a sudden it's sent to 2 other lenders. And I like the idea that cost per click is low, and then it's the lender's responsibility to convert that option.
I had actually a good question just pop up. If you don't mind, Jimmy, I'll jump on it. So, Brian, how do you guys navigate through the recent CFPB crackdown on rate tables? Great question. We basically, the move that we made from the table perspective, we used to have a sponsored placement, and I tested a premium placement. So sponsored would have been the top 3 spots on the table. They would have been called sponsored. We've moved away from that. We now do, the table is all one. It's sorted by APR, lowest to highest. And that's kind of at the direction of the CFPB. So we've stepped in line and just kind of followed what they wanted us to do. Even though we're not capturing any personal information, they felt it was a better, consumer-driven experience. So that's what we've done. And then the second part of that was, how do you vet out the accuracy of the rates and cost and things offered by clients? What does the process look like? So yeah, the technology is super smart, right? It's intuitive. It works behind the scenes to capture bot traffic, to international traffic. If there's a rate that's more than a certain distance away from the average, it gets flagged. And then my team, again, we've all been together for 15 plus years, working as a team on this table. A big part of their day in and day out is to monitor the table, identify a rate that looks odd, a fee that looks odd, just anything that just, doesn't make sense. And then we investigate. And then ultimately, my advertising community is a really good police. Also, they do a good job of, they're not afraid they're not
Let you
afraid
know.
they're not afraid to say, hey, this rate's not right. And then,
Right.
they'll raise a flag, and it's priority number one to us when that question comes up. So
Yeah.
we stay on top of it.
Cool. Walk through setup, onboarding. How does that look? How long does it take?
Yeah. So in my opinion, it's super simple setup, right? We have a standard insertion order that kind of covers the terms and conditions and what you want your monthly budget to be and those things. So once we get that in place, you provide us a company logo, provide us your landing page URL, and then we figure out the best way to ingest your rates. So you have a couple different rate options on the rate side. We can either pull them from like a MoreTech, Lone Tech, Optimal Blue would be three great examples. Or in the ICanBuy system, we also have 15 or 20 different wholesalers or source lenders mapped already. So if you use like a United Wholesale, for example, you would pick them as your source lender, and then you would go in at your account page level and modify your margins and your fees so the rate would display the rate that's appropriate for you and your logo. You also get to, on your account page, you pick the states that you want to be listed in. The credit, you can get really specific with this, all the way down to, I only want credit. I only want consumers that have self-identified as 740 plus. I only want loans above a certain amount. I only want jumbo products. I only want VA products. You can really get to granular with it. The challenge with that is the more granular you get, and let's say a consumer enters a table, but they don't tweak any of their search refinement, except for maybe the state. They always get their state right and whether they're purchasing a refi, right? So those are two kind of standards that they get right. But if they don't tweak the loan amount, and my default is, let's just say 300,000, but you only want loans 400,000, then you miss out on all of that potential traffic or clicks because you modified your requirement. And there could be a bunch of people in that bucket that would have qualified. They just didn't self-identify.
So try to make a broad net to a point. Get the net wide enough where you're gonna give yourself a chance.
My recommendation always, like right out of the gates, is let's come up with a monthly budget. Let's set a daily cap. Let's keep it as wide open as possible, and let's get some fish into the net so we can see what really worked and what didn't work, right? And then over time, we can start to tweak. Okay, for whatever reason, my clicks in Alabama didn't work, but the ones in Georgia crushed. All right, let's take the budget from Alabama, or let's remove Alabama from the profile and just focus on Georgia.
Got it. A little bit of reporting.
Yeah. So so each client, each advertiser has their own account page, and on that page you can go in and you can add funds. You can see how much money is spent. You can see how many clicks you received. You can also see where the clicks are coming from. So like the site ID, did it come from Realtor? Did it come from E-Rate, Mortgage Calculator, whatever it might be? You can really kind of keep in tune. You can, there's a button that says pause. You're going on vacation tomorrow and you don't want any clicks coming through. You just simply hit pause and your account will go on pause until you unpause it.
Great.
And you can either do that yourself at the account level, or you can simply reach out to the onboarding team or the client customer support team on my team, and they'll help you handle it. So we provide as much handholding as needed or as little as needed.
What do you, on a budget standpoint, like what do you think is an amount that someone should just kind of consider to get started where they can see decent, at least some sort of results, clicks? Is there a number that you recommend?
Yeah, I love the $3,000 number for some reason, because it gives you, and then do $100 a day cap. That way it gives you 30 days of clicks coming in. It's spread out. So if you're a smaller shop, you have enough time to follow up and kind of work the leads. You could do 1,500, but we have a only really minimum we have is $100. If you're doing a daily cap, it's $100. That's the minimum. cap you can have.
Gotcha.
So if you only wanted to, you want to say, fine, Brian, I'll spend $1,000. Okay, great. We'll turn you on. I recommend
10 days.
$100 for 10 days and you see how many clicks come through.
Yep.
And you can set it up by the hours too, Jimmy. You can say, I really only work 9 to 5.
Mm-hmm.
Let's just say that's the hours you want clicks. That's when you'll be displayed, Monday through Friday, 9 to 5. Or you take every Wednesday off. You just unclick Wednesday and you won't get any clicks on Wednesday.
Got it. Are there any tricks that you see, like, hey, the weekends are actually better? Anything that you feel like take away, just little secrets that you might feel like is an insight that you have on a day that works better?
Yeah, it's interesting. I was looking at some data the other day, and 1 week Tuesday will be terrible, and then the next Tuesday it'll be amazing. So it's, but I do recommend that you have your account live during the hours that you're most engaged on what you're doing.
Got it.
Right. I don't stay live on Saturday if you're not going to check your emails until Tuesday.
Yeah.
Right. It's just that lead to speed it's they've clicked, they waited, they're going to go on down the road and try a different avenue probably.
Yeah. Well, that's good info. And one thing that on the Banking Bridge side that we see, and really in this market, 2022, 2023, it takes a long time to get someone closed. It is what it is. So and then are you going to spend your money on a rate table, or are you going to spend your money on Facebook, Google, or some other source? The big benefit that we see for our customers that advertise on rate tables is the traffic that it sends to your website. People are smart, just like you and me. We know if we click a button on a website that we're not on, we're probably going to get retargeted. We're probably going to be in some funnel. We're probably going to get emailed by 10 different lenders or whoever, whatever we're buying. So a lot of these people would they'll see your name on a rate table. They will go to your website, they'll Google you, and then they'll go to your website, and that's where you can convert some of that lead traffic. So although you've got this $2,000, $3,000, $4,000 a month budget on the rate table side with ICanBuy, you're going to pick up more leads and more traffic to your website because you're advertising. And that's what this graph shows here is kind of how that works. One kind of takeaway, and I would say secret or insight that we have, is the best thing you can do when you advertise on these rate tables is to make your company name, if that's District Lending, pay for that in Google AdWords. It's super cheap, probably cost you $1 a click, but that way you're always ranked at the top of being a sponsor when someone Googles your name, and it's the best way to pick up that traffic when you're also advertising on those rate tables. So that's what we call the halo effect there, and it works on any rate table platform. And this is just some general stats of what we see when you partner with rate table platforms, whether it's ICanBuy or some other platform, is the increase in the number of leads that you get when you're on the rate table versus not on the rate table. So this is an example of a time period where this lender was not on a rate table. So 100 leads, which is still good. But when they're actively on the rate table, then their lead count, almost triples based on that extra additional website traffic. So this is another example of that. Not on the rate table, they are on the rate table, and their lead count goes up. Most of our lenders, typically, if they're paying, they're not doing a whole lot on Facebook and Google anymore. It's mostly rate tables. So the additional traffic does come from that rate table spend. Brian, any questions? We'll get a break.
Yeah, I actually had a couple good ones. You recommend advertising rates with 2 points, like a lot of online lenders do. We do not, right? To us, I think our default, I was just looking up to see what our default was, up to 1 point. That's what our default is. If the consumer wants more than that, they have to go in and click it. If I put 2 points, the table would probably list 20 different offers, right? And I think that it's cumbersome, and then the consumer has to dig through, the number of points. Well, that's a great price, but then they have to figure out why it's a different rate than everything else. So we default to up to 1 point.
So what that means is when the page loads, it's going to show everybody at 1 point across the board, and then the user can go from there. Is that right?
Correct.
Okay.
Yeah, the user has a lot of options. The consumer has a lot of options to refine their search and add products, but we default to 30-year fixed, which seems to be the most commonplace. And we used to have we used to default to several products, but then the table just became so cluttered, and it was, in my opinion, harder for the consumer to navigate what was going on. And we want it to be easy for them, so they're more engaged.
Got it. Anything else?
Jimmy, this one's for you. For your clients, are you recommending sending clicks from ICanBuy directly to your funnel? And do your current clients just grab the data or also push live rates?
Yeah, so we do recommend having either a dedicated page in your website or a dedicated landing page that has the Banking Bridge workflow. And we'll go through an example of what that looks like. But the reason being is because that's what LendingTree does. That's what Bankrate does. That's what these billion-dollar companies have spent all this time and energy on. It's the best way to convert a lead. It weeds out the spam. If you just use a contact form, you're going to get a lot more spam submissions. So we do recommend either a Banking Bridge landing page or your own landing page that you've built with the Banking Bridge workflow embedded into that page. So hopefully that answers. And rates. These people on rate tables, that's what they want. Get them a quote. That's what makes them sticky. Sending them through a form where they don't get a rate, it's just frustrating, and it's not the best way to start the relationship.
2 more questions. Do your clients pay only for clicks and not leads? That is correct. So we're a cost per click model. I guess at the end of the day, what you're trying to get to is how many dollars in clicks do I have to spend to get what I deem to be a qualified lead, right? That seems to be a pretty common question. And today that runs in the the $80 to $100 range is a pretty common number that we hear back. I mean, some do far better than that, some don't, but that 80 to 100 is about pretty commonplace right in today's market. And then the next question was about, where did it go? So the client gets no user data back. That is, well, we're not capturing any PII, but we do push to you, or we have available to you. We can tell you, did they select purchase or refi, the loan type they picked, what they estimate their credit bucket to be, the state they're in, any of the particulars that they give on their loan, as well as where the click came from.
And I will show examples of that at the end here. We'll do a live example so you can see what happens is they can, ICanBuy can stick that data in the URL of the landing page, and then you can grab that information and tag it in the CRM or utilize that data if you want to. But some of that you can grab. Yep.
One more question. How often can I update my rates? So the rates are updated live, right? So if you change your rates, whether it's in MoreTech or Optimal Blue, we're pulling in from them. It's a live update. If you're using, same thing, if you're using one of the source lenders, then those rates are adjusted on the fly as changes are made. Great. And you can make changes to your fees and margins at any point.
So it's real time.
It's real time.
That's great. Yep. Cool. Anything else?
That's it for right now so far.
Good. So, all right. So this slide is all about okay, I'm on a rate table. I'm spending all this money. A lot of times the money you spend on the rate table is a significant portion of either your overhead your budget, your overall marketing budget. So having that same experience in your website, mirroring that experience is the value add of one is a banking bridge. But the fact that you're promoting your rates out there and then someone comes to your website and you don't have rates, the chances of you converting that person go way down. So the idea behind why you want to pair banking bridge with rate tables is because it mirrors that same consumer's experience. They're hoping to get that in your website with the different tools that you see on the slide, rate tables, rate subscriptions, and all of that. From an ad perspective, so Brian and I were talking about this the last like 2 weeks about, hey, why rate tables? And the main reason is for small to mid-sized lenders is the learning curve for Google and Facebook, the school of hard knocks. You're going to go spend $20,000 just to try to figure out, am I converting? Is this working? And what we see in this market is the ROI is so bad on that ad spend, it's just not worth it. So you can plug into a rate table, you can get up and running in a couple of days. There is no cost of entry, there is no school of hard knocks. The money that you are gonna spend, you have a much better chance to at least convert quality people. Now you need to have a good landing page and have that experience tightened down, but at least you're starting from a better quality type of lead. Brian, is there anything you would add to that?
No, I just, again, and I don't manage those budgets for our company. I just know that anytime we try different things, we're not talking about a $2,000 budget to test, keyword search. We're talking about $50, $80, $100,000 to run a test, to find a signal, and then be ready to spend a bunch of money to make it work. Right? I have a hard time seeing guys that are, in a couple states that, are just getting after it, trying to spend a couple $1,000s on something that they really probably aren't going to get in deep enough to really solve what they're trying to solve.
Yep. And then you have someone managing it, and they take 20% of the cost. So if in today's market, I think rate tables are a much better, at least option for ROI than Facebook or Google. And then this is just on, hey, trends, what's the consumer's preference in today's market? And online shopping for every product is more important today than it was yesterday. It's going to be more important tomorrow. And having that experience in your website, having the transparency, having the rate display, whether you get 100 website visitors a month or 100,000, it's the most sticky thing that you can have in your website as a mortgage company. And the highest quality leads are coming through your website. The lowest quality leads are typically the ones that you're buying. The highest quality leads are the ones that are seeking you out, knocking on your door, coming to your website. And then I think a good goal for this year, because, hey, leads, the market is what it is, just time on page. You can look at your Google Analytics as a small company. That doesn't take a whole lot of knowledge to learn that, and just see, are people spending more time on a rate table page in my website than they were when I didn't have it. And that's important. So what else, Brian?
Yeah, I think you nailed it a few minutes ago. You just talked about, in today's market, it's just taking a long time for some of this stuff to come forward, right? And I believe that people on this call, it means they're engaged. It means they know they got to make some moves. They got to try some different things. And, if you can't wait forever, because if you wait now, all of a sudden 3 months from now, you're not going to have anything in your pipeline, right? So it's a bit of clearly an uphill climb, and it has been, but I think we got to keep taking our shots and making smart decisions, but, definitely got to be in the game to keep moving forward. And then when things do hopefully open back up, or, you've done a good enough job that you're ready to rock and roll and have a lot of things figured out.
Yep. So we're going to go into show everybody the Realtor.com example. But if they're interested in at least learning more, they can email you. Is that the best way to start?
Yeah, perfect. I'll 100%. Yep. Shoot me a note.
Good.
I'll be glad to respond. I did have one more question pop up. The rate table integration, is it with Loan Sifter, which is Optimal Blue? Actually, no, it's through their PPE product, which is, I think, product and pricing engine.
That's right. The full OB product and pricing engine.
Correct.
Yep. All right. So live example. How do you participate on a rate table? What does it look like from the consumer's perspective? This is a live example of the Realtor.com table. Just like Brian mentioned, you've got your filters in different locations, and you can update your products there. That you've got your table of lenders. The halo effect would be, okay, I like district lending's rates. I'm interested to learn more about district lending. I don't want to click a button. I want to go to their website. And here you are, now you're on their website, and he's speaking your language. He's got today's rates in here. He's got get a quote. He's able to kind of mirror that same experience that you would have on the rate comparison table. So subscribing to rate tracking, that's all built into the site. So that's an example of the halo effect. So now let's talk about the converting and the cost per click. So when someone clicks on view details for PenFed, here's the redirect. These are the parameters that you can see up here. All these parameters, Georgia, period, 30 years. That's what's passed in from the rate table into the landing page. And now it's up to PenFed to have an experience in their landing page to convert that lead. So if you have a bad landing page, or you have a page that's not responsive in mobile, and you're wondering why your conversion isn't very good, it's because your landing page is not very good. This is an example of a really, really good, simple, well-designed landing page. This step here, we were gonna hit on, Brian, and then kind of wrap it up about time frame. So maybe talk about that. You had some good takeaways.
Yeah, this has been a really big topic for a lot of my national accounts the past couple months or more, right? So this is one of the questions: signed purchase agreement, you're looking to submit an offer, you're 2 to 6 months out, or you're just doing research, right? So bucket 1 and 2 convert at a multiple, a 10x of what buckets 3 and 4 do, right? What I don't care for about this specific one is that's a pretty big range, 2 to 6 months, right? Maybe I might say less than 6 months and then more than 6 months or something like that. I think it might help a little bit. But yeah, a lot of questions about what can I do to get people that are higher up in the funnel than 2 to 6 months, right? And I think though that's the multi-million-dollar question for everybody, right? But I also see that a lot of these same lenders struggle with putting the buckets 3 and 4 into some sort of a lead management flow to help nurture them in. So when they're ready, you're front and center. I think if people on this call have a good process, once you get somebody, all right, they're not going to buy for 6 months, no problem. I'm going to figure out a way to stay in front of you for the next 6 months. Those deals are the ones that are going to help, hopefully bridge the gap during tough times. And then when things aren't tough, be the ones that help you go to the next level with your closed loans. So figure out a way to monitor these guys and stay engaged with these consumers that just haven't found a house or just kicking the tires a little bit, because I think you'd be surprised at how many would be loyal at the end of the day. So.
And if you have a form like this, a progressive form, you got to think of it from the lead's perspective. They're spending a minute. They spent a couple minutes on the rate table. Now they're going to spend another minute or two going through your form. That's a pretty engaged lead, whether they're signed up agreement or they're 2 to 6 months out. Getting that lead data into CRM, having a drip campaign that keeps them updated rates in front of them is going to improve your overall conversion. So that's going to kind of wrap it up. Any last questions in there, Brian?
Just one question about, do my rates go live the second I'm interim? No. So basically my onboarding team will take you, set up your account, work with you to make sure everything's set up properly. We have a demo page, test page that is not consumer facing, but you, the advertiser, can see your rates live and really, basically run some tests to make sure it's displaying properly before we put you out into the wild. So it's just one of the steps that we take.
It can be a 3 to 5 day process, a week. What is a typical? I make communication with you to the time that I go live. What does that look like?
The only real, not even challenge, but the only real piece of work is the rate piece of it, right? So if you're using United Wholesale and I'm going to map you to there, that's easy. Then I have to get you to go into your account and set your margins and your fees. We typically like to put you on the demo site for at least a half a day, so we can run some scenarios to make sure that it's populating correctly. And then we turn your list. So 3 or 4 days. I mean, if you're really ready to go, we can make this happen in a couple of days for sure.
Got it. Good. Any last questions? We'll wrap it up. Everybody will get a recording of the webinar, and we appreciate you jumping in.
Fantastic, Jimmy. I appreciate the opportunity.
Yep. Thanks, Brian.
Take care, guys.
Everybody. Bye-bye.